Hey everybody, it is Saturday the 13th of July 2019 and the markets closed at all-time highs here for the S&P 500, for the NASDAQ, and a couple other markets. So let's take a look at the charts and look at what's going on here, make some sense of it all. One thing that a lot of people are talking about is this, looking at the bottom right corner, that the volume is diminishing as price rises. Well, that's been normal for this market, and it's really kind of sickening that people still talk about that. There's nothing wrong with a market going up on lighter volume. It means that there's less supply available to meet the demand and prices continue to move higher. The market is about supply and demand. When there's less supply and there's sufficient demand, prices will go up. It doesn't matter what the volume is. The point is, people try to look at all kinds of different oscillators and indicators to justify that we might be at a top, rather than embrace the wonderful trend that we have right here in front of us. Instead, the focus should be on risk management and saying, if the market breaks below this previous low, then I'll get out, then I'll stop my position out. Or maybe, if it closes below the 50-day moving average, or whatever your particular time frame and risk management strategy is, that's what you should be focused on, not on trying to pick a top. It is a loser's game, and no one has succeeded at it in the last, ever, basically, because we're at an all-time high. So no one has ever picked the top yet. So looking at a 15-minute time frame, you can see, this week we held that rising 5-day moving average. And again, we're innocent until proven guilty. You can look at the market and try to sell it short and be cute. But I think that the next week, as long as we remain above 298, we remain innocent till proven guilty. It's a fool's game to try to pick the top. The NASDAQ also closed at a new all-time high on the weekly and daily time frames. So there's nothing bearish about new all-time highs. Quit looking for a reason to go against the trend. 191 to 191.5 is the key level in here. As long as we hold that, there'll be pullbacks, but they will be pullbacks within a primary uptrend. Russell 2000 had kind of a funky week in that it declined here and broke below the 5-day moving average, but on Friday we saw that it recovered nicely and we're back at the top end of this range. Now we're looking at a 15-minute time frame, so let's back it up a little and make a little more sense. On this daily time frame, you can see that since that most recent higher low at the 20-day moving average, we held the 20-day moving average once again this week. So that's important. And what we're seeing in this market is that it's a nice consolidation. I think that this market, the Russell 2000, if we can exceed the high of the last, of this day right here, that we're most likely headed for 160 to 161 initially, and then potentially higher from there. So this market, I think, has the potential to break higher. Ideally, we pull back a little bit on Monday and then get going. That would give us a nice higher low to place a stop under. At this point, the correct place for a stop still remains underneath this low. This still hasn't been violated. So if you're long early, then I think that's the key level to see, hold it down at about 154-ish. But keep a close eye on the Russell 2000 this week. It looks poised to finally outperform a little bit, perhaps. The semiconductors pulled back to that close to that 20-day moving average and continued to have a great week higher. I found it personally difficult to trade because of these gaps and didn't get involved, but we're still in a healthy environment there. The Biotechs, however, this market is really one that is showing us there's more trouble, because this market is still below the volume weighted average price from the December low. So what does that tell us? Does that mean we try to read into this and say that it's going to drag down the rest of the market, or we look at it and say, okay, the Biotechs can be trading down for the purpose of, there's sellers in the Biotechs. What I wouldn't do, and I said this to subscribers this week, is sell it short under here. People look to say the definition of a trend is a lower high and a lower low. Well, if this is a lower high and this is a lower low, you certainly don't want to sell short, not after a drop of 5 points or just under 5%. Instead, this is most likely a trap. It's right at the 50-day moving average. It probably trapped some shorts in there, got some people who had their stops under here shaken out, and it's most likely to bounce up. Then if it makes a lower high, then it could be in bigger trouble. But for now, I'd say just stay away from the Biotechs on the long side. There are, of course, as always, individual stocks within that group that will outperform. One of those that I'd mentioned on Yahoo Finance on Thursday was CRISPR Technologies, CRISPR Therapeutics, the gene editing company. It had broken this band of resistance in here and still holds above that on the daily time frame. It's in a nice uptrend. So here's a biotech that doesn't have to do what the rest of the biotechs do, but as always, focus on what you're trading. Quit trying to make some sense of, hey, the dollar versus the yen or whatever it is. Let's look at individual stocks. That's my focus. Individual stocks and individual markets, and manage risk based on how that individual market trades. And if you're not interested in the biotechs, then why care if they decline? You don't have to be involved in them. Financials broke higher this week as well. As we know, a week and a half ago, they broke the resistance here at 27.50, maintained above that, and now it looks like this group should head for at least a test of this up near about 129. If we back it up to a weekly time frame, as we've been noting for the last several weeks, we broke this downtrend line, we made a higher high, and this is an important higher low. Above $29 per share, it won't, of course, go directly up to and through that, but maybe we see something like this, and then on to new all-time highs for the financials. It's a healthy market. Don't fight it. Don't try to look for the missing piece and be smarter than everybody else. Just embrace the trend and profit from it.